Hey everyone, welcome to a Optimum FX weekly analysis. Today I'll be covering our major currency pairs. I'll be looking at gold, I'll be looking at the Dow Jones, so US 30, and I'll be looking at VIX, which is our fear and greed indicator, which is just the inverse of the S&P 500. Firstly, we'll be looking at what macroeconomic data is going to be released across our major economies. Then we go to the charts. And we're going to map out potential trade ideas with the technical and fundamental confirms. So it's currently the 25th of July today, 2021. It's about, I would say, about 14 hours until market open. And we're going to be mindful that we're essentially approaching the last week of July, which is essentially the last week of the month, and we're going to be very cautious as institutions will be closing out their positions, just because it's natural end of month flows. So yeah, just be very cautious of that, especially when we come around to Thursday and Friday. So firstly, we're gonna quickly have a look at what macro data is going to be released this week. So firstly, I'm going to run through this really quickly. I don't want to spend too much time, otherwise this video is going to drag out, and a lot of people probably don't care, but they should. Anyway, so on Monday we do have new home sales, along with Dallas Fed Manufacturing Business Index. We have durable goods orders, along with Case-Shiller Home Price Index, which is just a broad indicator of like home prices. Obviously, new home sales like factors into it. So yeah, like that's just like this is probably the biggest housing price indicator in the US. Obviously, more people buying houses is essentially saying the economy is booming. Essentially, a lot of people have confidence in the economy, that they got money to spend, that they got money to get mortgages, get loans out to purchase homes, which means that they got money because they're currently employed. So yeah, so it all ties in together. Like obviously, if we get positive mortgage applications, more people are spending, more people got money, more people got capital, so they're taking out loans to buy a home. So what does that mean? People got money, right? And that's how the economy drives. So how else can that factor in? That can factor in because employment's good at the moment, because people are only going to be spending if the vast majority have jobs, or if the vast majority have incomes. Okay, so yeah, you just got to factor that in, and just kind of look further as to whether home prices are negative or positive. I guarantee you, if you look at the Case-Shiller Home Price Index a year ago, it would have been completely negative. Probably after rolling out with this stimulus and more people get employed, unemployment decreasing, this would have started to rocket. Essentially, would have started appreciated on a month-on-month basis. Okay, so moving on, we do have goods trades balance. We do have the Fed interest rate decision, so that's probably the most important thing to watch out for. We might see it range. Essentially, we even might see it range like late in the session on Tuesday, and throughout London, and prior to the interest rate decision, which comes out pretty late. So yeah, we're going to be very mindful of that. Subsequently to that, we do have PCE data being released. As we know, PCE data, that's what the Fed likes to use to measure inflation, not so much the CPI data. So we do have jobless claims, GDP, so you'll get a rough idea what GDP is from the trade balance data. So moving on, pending home sales, natural gas storage change, PCE price index on Friday. Employment cost index will actually be able to tell. This is a quarterly report, so I don't know why it's low impact, but it should be a very high impact because it's really telling you, the average costs for labor. So if the cost is actually increasing, obviously WPI, so wage price index, is always going to appreciate, because essentially workers are getting paid more, but then you got to counter, and then you got to take into the fact that if inflation has been, let's just say, appreciating over the past few months, which we know it has, employment cost index will most likely, okay, and we pretty much know at this point in time that wages have been increasing because a lot of employers are struggling to find people and essentially to keep people on their books. So what does that mean when they increase the wages, right? That means the price of the goods and services go up because their business expenses go up, right? And then what does that mean? That means inflation goes up if their goods and services increase, okay? So more than likely that this is going to be positive. I doubt it's going to be negative because this is a quarterly thing, right? It's giving you data from the last 3 months. So moving on, we do have Michigan Consumer Sentiment Index. Okay, moving on to Euro. We do have on Tuesday private loans and money supply. Thursday we do have consumer confidence, industrial confidence, business climate. So essentially, just it's just essentially just telling you how much the economy is expanding or contracting, and essentially just seeing what the consumers believe and are forecasting in the coming months with the European economy. So moving on Friday to end of the week, we do have GDP with CPI data and unemployment rate. So we're going to see a lot of volatility with the euro to end the week. So just be careful when you're trading on Friday. That's all I can say. So moving on to UK, we do have central bank member speaking on Monday. We have the shop price index. This isn't like a high volatility report. This isn't high volatility report, but it kind of gives you an indication of the price of goods out of retail outlets. So on Wednesday we do have nationwide housing prices, and on Thursday we do have money supply data along with monthly mortgage approvals. Throughout the UK, Japan, we do have preliminary manufacturing PMI data being released. We do have Bank of Japan Governor Kuroda speaking. We do have leading economic index, which is just like an economic forecast and what economists are actually projecting for the Japanese economy in the coming months. We also have job labor clinch ratio, unemployment rate, and retail trade, along with industrial production on Thursday. To end the week, we do have construction orders, consumer confidence index, and housing starts. Okay, so Wednesday in Canada, we do have CPI data being released, and you find it a coincidence that CPI data gets released at the same, during the same week across our major economies. Okay, just have a think about it. Just have a think about why CPI data all gets released at the same time. Okay, so on Friday to end of the week, we do have material price index. We essentially got GDP being released on Friday. So on Tuesday we do have RBA central RBA member DeBell speaking. CPI data again being released on Wednesday. Import-export price index, which is essentially, that's just an indication of your trade balance. See if there's actually been fluctuations in price with our importing and exporting of goods. We do have PPI data being released, which is essentially the inverse of CPI. Like, it's essentially telling you what the producer is paying for goods and services. And we do have private sector credit. Okay, so I've cleaned up my charts. So taken off the key levels, so it's really clean. We can have a clean chart, and we can map out potential trade ideas. without our technical drawings. Okay, so looking at a clean chart, you know, like it's always good to see, just always good to look at, you know, what price has done, right? So we're still in a risk off sentiment, only recently, because one of the main things was the Federal Reserve hiking interest rates at least 2 times by the end of 2024, tapering their bond buying program. But obviously they're not going to do that as of yet, because they need employment to reach a certain number. They obviously need inflation anchored at 2%, and obviously they need GDP, or real GDP at a certain figure. So that being said, you know, we are in a risk-off sentiment, and another thing encouraging this risk-off sentiment is the extended lockdowns throughout our major economies. Okay, I know with Australia at the moment, there's lockdowns across our major states and territories. So what does this mean for the economy? Obviously it's bad for the economy. So, you know, with less places open, you know, less retail shops, retail outlets open, that means less restaurants are open, no cinemas are open. So what does that mean if, you know, restaurants and shops are closed? You know, they're increasing lockdowns. Obviously that decreases the revenue for these businesses, right? And what else does that decrease? That decreases consumer confidence and consumer spending, right? So what does that do to the economy? That obviously weakens the economy, that dampens the economy. So like, it's already been priced in, like we obviously know that, but you know, we just got to take into fact, you know why has this happened? Like, it's good to know now why this has happened, and it's good just to act accordingly, and then be reactive with the current economic situation, because, you know, there's always going to be, like, there's always ways to make money, whether we're in a bull run or a bear run. Like, overall, the Australian dollar is like still bullish, right? Still bullish, right? Probably want to see if we break below here, yeah, you know, this risk off sentiment is going to continue. One thing here, right? So if I'm looking at the chart right now, so obviously we're in this like tight little range for essentially, I'd say, yeah, about a month, you know, dipping down here, come to this range here. After we did have this flush room to the downside, we failed to break and retest and stay above this little key level of interest. We did, you know, test like this little candle bodies, you know, this little indecision candle, test this little candle body open, fail, you know, like there was obviously a lot of exhaustion in this area. Then we did continue to push to the downside, and we did get some strong reactions at the low, right? We did get some, like there was heaps of exhaustion at these highs here. Obviously we did retreat, and only recently, so only when was that? I think that was a bit over a week ago, we did actually retest here. There was possibility for us to continue to the upside, but with this continued risk off sentiment, and we can definitely see Dixie start to appreciate and bounce off these yearly lows. We are continuing up nearly to the yearly highs. Like, we are getting very close. Like, that's a very sensitive area. I will talk more about that very shortly. So what am I looking at? All right, we do have a risk off sentiment. Okay, I don't see us completely just having like a massive bull run or a massive bullish push. You would need restrictions just to ease off. Central bank members being a lot more optimistic, because essentially when there's restrictions in the economy, that decreases the revenue like massively. Like I was saying before, people can't spend money. Okay, so it's enough about the fundamentals, because that's essentially the same case for every other country. It's the same thing, obviously a bit more variables, but let's just map out the technicals. Okay, so alright, so we did push to the downside here. What I'm really liking, we could take some high risk shorts at 74 200, right? These little candle body closures here. What I'm really liking here too, like, we are generating a bit of a liquidity area here on the higher time frame, because we can recognize that this is 22nd July. You know, this is roughly about 2 days of price action in this discussing range, because we know that the Aussie likes a range a lot, like USD Cad. So obviously here, if we can break and retest above here 73857, we can target these, we can target these, so get a nice candle body retest here, so we get a nice bullish push up, close above here, then if we can generate a bit of a support retesting this little order block high, we could take the buys and take them up to 73,200. Okay, they are your pretty much your high risk buys. Well, I'd say they're your medium risk buys. Okay, they are your medium risk buys, and once we break in retest above here, get some nice candle body closures on the 4 hour, 30 minute and 1 hour, we can definitely take the continued buys there. We can definitely hold our buys, or for that I would need to see Dixie start to fade, and not start to fade essentially not come up to this area. If it comes up to this area, Aussie's just going to deappreciate strongly. If we can break and retest below 740, and come and play in this little range here, because we can recognize late last week we did retest this high time frame order block high, continue to the upside, but we break and retest below here, we will play in this range, but we can definitely draw out a trend line here, but I'm not too inclined on that. So if we get some nice candle body closures below here, we can continue to the downside, and then that would essentially change the mood a bit to a risk on sentiment, with our risk currencies appreciating. So we can take the medium risk here, 850, target these highs here, target the previous range 300. So that's just going to give you 35 pips, which is a nice range. Or we can wait for price to reach this, reach the previous low here at 73 cents, take some high risk buys at 73 cents, and essentially target the previous range lows. So that's what I'm looking at on Aussie. Euro we like completely whipsawed, right? So let's just quickly have a look at our historical key levels. So yeah, like I said, if we play in this range, we can continue back up, but we need to see Dixie start to fade very strongly. So so moving on to euro dollar. So euro dollar is essentially the same thing. We did have a bit of a whipsaw. I believe that was on Thursday with the ECB interest rate decision, where they did not change anything whatsoever. So honestly, we can definitely see this bearish crypto structure, right? I'll draw it right now very quickly. We can definitely see this bearish crypto structure. Okay. Yeah, no, that's gonna be a horrible trend line. Don't really want to draw that one, but yeah, we can definitely see this bearish crypto structure. Okay. I'll get rid of that so we can identify that. What I'm really liking to see is alright, if we can break and retest below here, get some nice candle body closures on a 4 hour, 1 hour, even a 30 minute, get some nice candle body closures below here, we can continue and push to the downside. But Dixie would need to appreciate and continue to these highs. Alright, let me just quickly say on Dixie, if we actually do come to this is your level of interest, this is a make or break. I would not be surprised if we get the sharpest rejection, right? Because the thing is, the market just can't do this. I'll just do a quick example. The market just can't reach a previous sensitivity level and just go boom. It just doesn't happen. More than likely, what's going to happen? Because you got to realize, when obviously on a, I don't know, I'd say on an interbank smart money concept, you got to realize there are more than likely sell orders, right? There are sell limits at this point here, but I guarantee you there are buy limits here. It's just identifying where the momentum is. Are there more buyers or sellers in this area? And then the market's really going to dictate you. But the thing is, if we're reaching a yearly high, we're going to get some strong rejections. If not, we're just going to keep trading, because after the strong bull run, we've just been trading slowly upwards, right? So I'm just saying, I would not, they would be some very high risk high reward shorts, okay? Some very high risk, high reward shorts. So yeah, that's just a sensitivity area just to be mindful about. So let me go back to euro dollar. Okay, so what am I looking at? So potentially break and retest. I'm just saying, like, I really want to go with the wick lows because I'm not too inclined to continue selling euro. So what am I looking at? So if we can break and retest below here, we will continue to the downside, and Dixie would have to shoot completely up. Like, it would have to. I'm not too inclined for that happening. Like, we're at a make or break point. I believe euro is gonna dig deep, like dig a bit deeper, but I don't think we're just gonna get like a big bullish push. Like, I just don't see that. Like, I just don't see it happening at this point in time. So obviously we can take some high risk buys here. I'm at 500, but I probably wanna see like a nice like counter body support at this level. Any counter bodies that close, like even on the 30-minute or 1 hour, if we see any 30-minute or 1 hour closures below here, I could be very inclined to take some shorts. And then if I'm taking some shorts, like, where am I targeting? I'm targeting this area here, right? And then when I'm zooming out a bit on a 4 hour, I wouldn't be surprised if we get an aggressive double bottom at 117 flat, which is essentially 70 pips away. Okay, if we get an aggressive double bottom here, that would actually make sense for Dixie to come into this sensitivity area here and get some strong rejections, right? That'd be like a high risk, high reward buy on euro. And if I'm taking that buy, you know, I'm more than likely going to be targeting roughly these highs here, or potentially coming back up to this little range here. Like, that would be like a strong swing trade, potentially. So yeah, so that's a very good trade idea. So yeah, you know, like, you just gotta look closely, you know, where the sensitivity areas are. You know, looking at euro, could dig deep a bit lower here, and dollar, we could dig deep. We could not dig deep. Sorry, we could continue to the upside. Okay, so moving on to GU. Okay, so moving on GU, we have had some very optimistic headlines from the central bank members. We did get a nice counter body retest at the wick lows, right? At this wick low on the high time frame. I would have been more inclined if we actually did close, like only close here. We actually did dig a bit deeper, right? If we can break and retest above 600, we're at like a sensitivity level at the moment. We could play back in this range. We continue back to the upside, right? Like I was saying, okay, in order for us to dig a bit lower, you'd need to see Dixie just fall. Like, you know, like, this is essentially one of the methods of how I trade. Like, you know, I'm always trading a dollar, right? I'm always trading a dollar. Like, I'm trading like GU or something, or euro dollar, or Aussie dollar, USD Cad. Like, I'm looking at Dixie. You know, I'm looking, because that's essentially what I'm trading against, and I'm trading a risk currencies, and all risk currencies, they all operate the same, 100%. Like, there's gonna be some variables, like, you know, pull up AU, and we pull up AU and GU, like, it's pretty similar, because we did get a strong pullback to the downside. Obviously the pound's stronger out of our risk currencies, but yeah, like, you can definitely see that euro is obviously a lot weaker. So yeah, you know, going with GU. GU is looking pretty promising at the moment, but literally I won't be surprised if we dig a bit deeper. If we do dig a bit deeper, we could potentially take some sells and mirror this move here. Take some sells if we get some nice 30-minute, 1 hour closures below 137 psychological price level. So we dig deep a bit lower here, we could continue to the downside, and we could target these lows here at 970. Am I inclined to do that? Not really. Like, not really. I'm not too inclined to take sales at all, because just because of how impulsive these bullish pushes are. Like, we did get a strong bearish engulfing, generate a bit of support, but then the whole move just got mirrored. So yeah, like, that'll be a very key level to look out for. But like I was saying, if we can break and retest and stay above here, we can take the buys and target the previous order block high, 138. Get a nice retest here. We can go for 100 pips. Be a nice little swing trade. But I'm expecting Dixie just to gain a bit more strength, especially with the interest rate decision. So just be very mindful of that. So let's be very cautious, okay? So that's what I'm looking at. GJ, what am I looking at? So essentially GJ, GU, essentially the same thing. Like the market structure is essentially the same. So on GJ, right, we actually did retest this little. It's pretty messy. I'm not gonna lie. It's really messy. Like you can't deny this bearish structure. What I'm more inclined to do, we did retest like this previous low here. So I would expect us to get like a deeper pullback, especially on Monday. To get a deeper pullback, we can take some high risk buys, and we can take them up and ride them up to 153, 400, which is a big range. If we get some high risk buys, if we can see a pull back about 40 or so pips, could take some high risk buys here, because we can definitely identify this on a high time frame. This is a nice little liquidity zone. We've seen prices range, generate a bit of support, broke above here. So yeah, I wouldn't be surprised if we just do a bit of a pullback of 40 or so pips. Just see prices get pushed to a favorable demand zone. So yeah, that's what I'm really inclined to see. So we could take those buys up and potentially target these 152, 600, or the previous order block high at 153, 425, which would be a nice swing trade. And once we break above there, we could get out of this bearish crypto structure. But once we break above there, we could play around this little range here. But I'm just very cautious, just of the strong bearish pushes, because with all these COVID variants, we've seen the yen appreciate a lot more against the dollar. It's been proven as essentially a more reliable safe haven than the dollar, with these additional COVID variants, increased COVID cases throughout the world. So USD Cad, right? So USD Cad. So we got to factor in as well. So OPEC came to the agreement of increase in oil production. So it finally came to agreement after all the tensions. And then that's probably why we did see USD Cad start to appreciate. Obviously, we did have a risk off sentiment, but we're seeing that USD is fading like very strongly against the Canadian dollar. So so yeah, we're just gonna keep in mind that, but we can't deny we essentially cannot deny this bullish corrective structure, right? Break and retest below here, we will definitely continue to 123, 180 if we get some nice scanner body closures here. Hell, even right now we're in this bit of a tight range. I'm not expecting us to get out of this range until the interest rate decision, so don't expect to break out of this until after Wednesday. So I guarantee you, if you made it, if you're still watching this video, I guarantee you the market's just going to range until Wednesday. So the market is going to be rangy. The market's price action is going to be disgusting, but I guarantee you, after the interest rate decision, the market will be a lot better, without a doubt. The price action will be a lot better. You'll see a lot cleaner moves. I'm not really too inclined to take too many trades prior to Wednesday. I miss out on a couple of days of trading, but I know you can get some nice clean moves after the interest rate decision. So you can still make moves, but I'm not expecting to make any big moves. So that's just my advice, and what I've learned and experienced, especially when the interest rate decision comes out. So just be mindful of that. I'm not expecting us to break out of this range. I doubt it. So obviously breaking retest, get some nice 30-minute to 1 hour closures below here. We can push it to the downside. I'll be targeting these lows here, 124,500, which is essentially 100 pip range. So yeah, that's something I'm really inclined to see. We could potentially, if the Federal Reserve talks about tapering the bond buying program, we could mirror this flush move. I'm not expecting us to continue to the upside prior. I wouldn't be too inclined on that. There is a possibility, but yeah, I'm just not too inclined for that. So yeah, we might get some whipsaws here and there, but once the interest rate decision actually comes out, we'll definitely see cleaner moves. So gold's price action has been discussing as well. So it's been horrible after these flush moves here. But like telling you, we're in this tough range at the moment. At 1792 lows and the peaks at 1833. Okay, so what am I looking at? So it's really on a price action perspective. If we can break in retest below 1795, like it's a nice candle body closures, like below 1795, we can push to the downside, right? Targeting these lows here. Or if that to happen, I would probably need the Federal Reserve to start tapering the bond buying in the next couple of months, and be very, very optimistic about the US economy, even talking about hiking the interest rates sooner, or as expected. So, but if we see Dixie continue to weaken, we can take some high risk buys here, roughly around, I'd say the candle body, so like 1795, and we can take some safer buys if we can break and retest above 1832, and we could potentially mirror this whole move. Okay, it's just that the market's been ranging very strongly. Like definitely, I mean, these are some good ranges. You can take the entries at the lows here. Target the previous highs here. Like there's definitely there's still money to be made. But you're just playing in a high time frame range. So that's essentially what I'm looking at on gold. Yeah, so like I said, across all of our dollar pairs, just be very cautious, trading prior to the interest rate decision, because we are going to range a fair bit. So moving on, so like I said, with Dixie, could potentially take some high risk shorts at 93,400, high risk, high reward sells, and sells on our safe havens and longs on our risk currencies. So with this being, after bouncing off these intraday yearly lows, we did get some. We did push strongly to the upside, especially after the initial monetary policy statement. Talking about hiking interest rates and talking about tapering their bond buying program, which is actually great for the economy, saying it requires less fiscal assistance, and saying that the economy can proceed with a contractionary period, which is which is actually increasing interest rates because the economy is flourishing, right? They can't have an expansionary policy consistently because it's just not sustainable. So moving on to the Dow. So Dow, we're currently at like all-time highs, breaking retest above here. We will continue to the upside. Don't fight the Feds. Just, when it dips, when Dow Jones dips, you just gotta buy it. Like, you literally just have to buy it. To anyone that sells Dow Jones, I don't know why you would, unless it's like a little scalp. But yeah, I'm not inclined to sell it. Like, we did get some strong rejections here, but the fact, like, once we break in retest here, we will continue to the upside. But I'm expecting us to range a little bit with my whipsaw price to interest rate decision. So that's essentially what I'm looking at. So yeah, so we might range, we might mirror this move here, but I'm not too inclined on that unless we see some positivity about the US economy, about interest rates increasing a lot sooner than expected. So the VIX, obviously we had those COVID variants which actually increased the VIX, so increased the fear. Dow Jones dipped 19th of July. Let's go right here. 19th of July. Like it's essentially the inverse. No one for anyone that doesn't look at the VIX. So obviously once we break in retest below here, 15, obviously that's great for the economy, but I don't think we're actually going to dip below there, because we haven't dipped below there in like ages. It's been a while. So so with that being said, so yeah, you know, I think it's just always good just have a look at the VIX, see what the VIX is doing, understanding why we reach certain levels, because the VIX is just essentially a market sentiment. Obviously when the VIX is high, fears in the markets, equities are down, dollars up, risk currencies are down. So we're just gonna, you know, it's just a good tool to use, just to gauge the current market sentiment. So anyways, you know, they're the trade ideas. You know, we're mapping out potentials, high risk buyers on our risk currencies. Dow Jones is at all-time highs. If we retest there, we can continue up to the upside. We can, you know, we can hit 36k, you know, in one session. Kidding. So yeah, so that's just yeah. So yeah, if you enjoyed the video, please be sure to like and subscribe and share, and yeah, I'll talk to you next time.